This meeting is being recorded.
Namaste. In the previous video, we have seen making of trend lines, how to make the trend line, how to interpret the trend line, and various charts. We shall continue the same in this video also with the help of few charts as we were doing. Let me show a chart to you. This is the chart of Nifty. This is the chart of Nifty. The traditional way of doing or making a trend line is to connect the highs as I mentioned in the previous video. In case of a downtrend like this, and connecting the lows in case of a uptrend like this. This is how the traditional way of doing or making trend lines. This is an accepted practice, but I would like to make an attempt so that we can evolve a new assumption or test a hypothesis so that we would achieve better results. Please kindly be informed that it is only my assumption or estimation so that something can be added to the existing methodology. I may fail in my attempt. So why I am doing this? Because by doing this, it may spark or ignite an idea in your brain so that you may come up with a better idea, even though I fail in what I am trying to explain to you. With that, I am trying a new way. I don't know whether somebody already reported this or not. As far as I have gone through, I did not come across this methodology, but still I wanted to make an attempt. I request you to kindly excuse me if I fail in my attempt or if the attempt seems to be useless. Thank you. First, let me clear the studies. Yeah, to be cleared. I take some time back. What I exactly try to do is first I will connect a low to the next important and prominent top like this here, and I will try to connect. I You please note that I connected this low to this high, not low to low or high to high. From this low to this high, and I will connect another high which is formed almost of this line, and try to connect this to the next high. Okay, I connected low and I ignored one high. I took the next high and I connected the another high. And this intersection, as usual, is taken and a horizontal line is placed here. And I will change the color of the horizontal line so that it will be of help to us, and we will have a distinct mark. Right. Let us see what happened. Here you can see at this area, this line actually acted as a resistance level, and after crossing again this level also did not hold good for some time, and again it was retested, and after crossing this line this went up. So like that, instead of doing things in a traditional way, let us make an attempt so that it will be of help to us. And in the same way, I will connect another high to another low. Here we have a high. I will connect to this low here, and I leave this low, and I take this high high, and I will try to connect the high to the next high. And I will connect this low to this high. Right. Again, this line intersected here. This line did not intersect, and when I extend this line, it went up, and I will draw one line here like this. Now you can see the triangle like formation is here, very long line, and I will also extend this line. Now here we have an intersection, and I place a horizontal line on the intersection. Let us see what happened. We will change the color to white. And let us see what happened. Here again, this line, actually here also, it acted as a good reversal point, and when the price crossed after testing the same level, the market went up. So this way, instead of doing the same thing, we will also try to make a new ways or new methods of applying the what we have learned previously. And after clearing this, let us consider the volume aspect. Here you can see the volume. Here you can see the volume. And as there is 5 days in a trading week, first thing I would like to do is to put one moving average of volume. Because there are 5 days in a week, trading week, I will put volume of 5 days, exponential moving average of 5 days volume. Here it is, I am changing the volume to 5 days, and I am changing the color to blue and style to thicker so that it will be evident. Right now you can see an everyday volume is not the same. Some days it is going down, some days it is going up. The most important thing we have to consider is how the bars and volume are behaving. Let us analyze the bars first. We have seen that the bars appear like this. As I told you earlier, bar, this is the bar length of this. Let us go for the anatomy of this is the bar length of the bar. This is the high of the day. This is the low of the day. And the left tick is opening of the day, and the right tick is closing of the day. We have to examine very carefully each and every bar, and each and every bar gives us some clue about the future, in which direction or future course of action of the index or stock. Here, the length of the bar is very good, showing that there is a good amount of difference between the open and close, high and low. So the open itself is high, and the close is very much nearer to the low. It means it is a bar of bearishness in nature, because close is lesser than open, bar is in red, otherwise it will be in what you call as green. Here you can see the bar is in green, but when compared to this bar length is more. Here the open is here, and the high is close is here, and close is very much near to high. So it is a bullish bar. But on next day, what happened? You can see that there is an increased volume, and the length of the bar is not much more than the previous bar, and it is somewhat at the similar range or somewhat lesser. The next day the bar is more in length, and the open itself is high, and close is very much near to the low. So it is very good indication that some bearishness is going to take place in the next day. So what happened next day? Next day also the open is very much near to the high, and during the course of the day the low was lower than previous day low, but not lower than the 2 days low. Here, if you compare previous 2 days low, this is the low compare, and this is the low of the 2 days. Out of these two lows, this is the lowest of the low, but it was not breached. At the same time, what is the highest point? This is the highest point of these 2 days. So these 2 days high also not crossed. So there is some sort of indecisiveness amongst the traders, and there is increase in volume compared to the previous day. But here the notable point is the close is nearer to the low of the previous day, but on this day, though the close is below the open, it recovered well, good, very, very well, and very good length from the low of the day, and closed almost at the same point of the previous close with increased volume. That is the first thing we have to observe. Here, the close is the day low after the day low. It can be assumed that since the open is near the high, first the market went down up to this point. Later, institutional buyers or informed buyers who have a tendency to buy stocks at certain point of mm, price instead of other things, they started buying. Since they bought more volume, the price started pushing up and went back again, and the distance between the open and close here is less than the distance between open and close here. Though the close is below the open, still the close recovered well enough from the low of the day with increased volume. It suggests that, and another point is the low is not below lower of the 2 days previous to trading days low, though the high is not more than the 2 days, two previous days highs. It does mean that without looking at any other indicator, we can say that some sort of recovery is likely to happen. So, when that will happen, we need to verify. What does the next bar say? The next bar is very much shorter in length when compared to this. It is very much very much shorter in length, and the distance between open and close is very less. But we can assume that first, the open is here. Later, the index went up and later came down. After coming down, it closed near the low of the day on reduced volume. That is important. This is technically what is called as inside bar. Here you can see it is an inside bar with reduced volume. So, what happened? The distance between the low and close here is lesser than is I mean is more than compared to this place, but here the high of the previous day has been crossed, and the open is almost at the near of the previous day high or open, and the open high was more, and close is almost near to open, and the volume is reduced, showing that no more further probable selling is in offing. And what happened yesterday? The almost the open and close are same. The length of the bar is very small and compared to this, and though there is no further high or fresh high than previous day, the low is very much higher than the previous day. It means that the volume is very less. Here it shows that the trend is most likely to change, and after that it changed and the market went up. So it is always better to verify where to make an entry point. Here for that, let us make this is the important bar. So let us put a chart, let us put a horizontal line here. When we put a horizontal here, here you can see this bar closed above this important level of the high. When this bar closed, next day we make an entry, and also you can see that the volume is more. Next day we make an entry, and this time we this market went up. And again after going, you can see that the length of the bar is more here, showing that there would be strong volume. I mean strong move for the next day. Next day what happened? The open is low itself and high is at the level of the close. It is okay, it is a bullish trend, but consider the length of the bar. It is very important. Technically, open is at low, close is at high. It means it should be bullish bar. But when you seek and compare the length of the bar with the previous bar, it is a shorter one, and the volume also increased. So it rang a bell of caution yesterday. Next day, what happened? Here you can see that the open itself is the high. Open itself is the high, and there is an increase of volume. So what happens is this is a bearish bar that took place, and the length of the bar is more than this bar, which is called as outside bar, which indicates trend reversal. Here you can see the distance between the open and close is very less. Here here also the open distance between open and close is less at some places, or it is same, but here the volume is less, and here the volume increased very much, and the length increased very much, and this bar took place after then upward movement. So this level is very important. This bar started indicating, this bar actually foretold us something is going to happen before happen in the next coming few days. So you have to take into consideration the anatomy of the bar. Okay, you consider applying indicators, but at the same time, we should not ignore what the bear chart is telling us like this. Here, the bar chart is saying, simply saying, open is very much near to, I mean, close is very much near to open. It is a bearish bar, and the length of the bar is more, and there is an increased volume, and there is a actual spike in the volume. It shows that informed buyers or institutional buyers are ready and willing to sell the market or the index, so that the volume increased suddenly and more than the previous spikes. You compare the spike here. Here the spike on which day the market went up, and again here this spike which is more than this spike on this day, the open itself is high. When open itself is high and volume is a spike, it indicates 100% bearishness, and subsequently market went down. So all these bars are almost of same length. Open is less, open is more than close, open is more than close, open is more than close, and you can see volume slowly diminishing. And suddenly there is a rise in volume here, only up to some extent. But the length of the bar is more. So the length of the bar is more, but still it is in red. But there is an increase in volume. The increase in volume suggests that prices are likely to react, since the price has come to such a level where the strong hands are willing to buy this index or stock at this particular price which they consider to be fair. So they enter when the market is down, and there is a spike here. and again there is a diminishing, and slowly here the length has come down, come down, come down. After that, after coming this to this level, you can see very well that almost the bar length is same. The bar length is here shorter, and the distance between open and close is somewhat less, and there is reduced volume. So this is the first indication that the lows are almost same. If you consider the low here, it is 24,629. It is 20 24,606. It is 24,587. So hardly 20-30 points, not more than that. Almost all the low level of the three bars is almost the same, though the level of the high is not more. So if we connect this, let us try to put one triangle here. Now you can see it formed a triangle formation. Triangles always indicate trend reversal, or if you wanted to expand, you can expand this from this level also. Let us try to put one triangle here. Now you can see next day what happened. There is a good recovery, even though lower volumes. On lower volumes, open itself is close, and length of the bar is more, and close is near to high. It indicates, it 100% indicates a reversal of the trend. I will put a arc here, arc, I mean eclipse here. I will put an eclipse. This is a bullish bar. Here, this bar, and as we put the important bar here, here this line still holds good, and once this level is crossed and the same level acted as resistance, support, sorry, support, this line went back and the price started moving up, and here also you can see for yourself that line we drew long back started going up, acted as a good point of support and resistance for the price to in the days to come. In the same way, you can compare yourself. Here also see the bar. The bar is short one, and price is open and is equal to close, and there is an increased volume level. I think, let me put a vertical line. Yes, increased volume. Next day there is a good amount of recovery, and the length of the bar is more, open itself is high, itself increased volume, with increased volume which is above the uh, 5 days exponential moving average, and again this price went up, and now we here we will put a horizontal line, because this is an important bar. Here we will put a important bar line. We will put a line, and see how in future it acts. And you can see that next day there was small bar, and the difference between open and close is very much less, and this bar length is shorter than this bar. It means it is an inside bar, which indicates short-term trend reversals. Next day market went down, but on good volumes. But so What is the best area? The best area is to buy when price closes above this level, since this is the point we have taken. This day also the bar went above this level, so we may consider entering the stock, but at the same time we should not forget that the bar has to close above this level. So for that, what I suggest is always take the low of the bar to enter. So here you can see that the low of the bar did not come down. So once the low of the bar closed above, I mean, placed above this level, then next day at the opening itself we can enter. That way you can see. And here also, when other things like that, this is a bullish bar. It is okay. Next day, what happened? Compare it to this length of this bar. This length of this bar is shorter one, and open itself is high, and close is sorry, open is above the close of the previous day, and high, close is near high, but the length of the bar is shorter one, indicating something is wrong, and on reduced volumes. That is important. First thing is length of the bar is smaller one compared to previous bar, and this volume on this day is short. So compared to less, compared to previous is less. So what I do is I will put a horizontal line to see that what is the level that should be maintained. It is the level. I put a horizontal line at the high of the long bar, so that whenever the low, if the low of the bar crosses below this level next day, that is a bearish indication. First something is going to happen, and that is also, as I told you, this is on reduced values, and we have to take into consideration the volume aspect very much. The volume has come down and below its 5 days moving average, and so it means that something is wrong. And on next day, if you consider that the high of the next day is very much near to this level, very much near to this level, and there is distance between high and open and close is very very less, and the length of the bar is very much below or smaller than the previous bar, indicating it is an inside bar. Inside bar happening on a lesser volume compared to previous year and below 5 days moving average, which further confirms that there is a bearish trend in the offing for the coming days. So what I do is I delete this study, and again I will insert one horizontal line below, just at the place of the low of this bar. This is the highest bar of the, compared to last 2 days, it is the highest bar. So I wait for the bar less low of the next bar to close below this line or close here. You can see that the low has come down below this level, and close is also below this level. So if you see that, if you see that there is a increase in volume compared to previous day volume, you can see this. Here the volume is more compared to previous day, but still not above the 5 day moving average. It further confirms the bearishness in the offing. Sorry, something went wrong. I will reopen. Kindly bear with me. Right. Next, we consider this. And after coming down for some time, now here you can see a spike. Here you can see another spike. Here you can see another spike. So when there is a spike in the volume and the volume anatomy, the body anatomy shows that something is going to happen that will be the that will indicate the reversal of the trend, which we will consider. Here you can see the trend is the volume is very much up, but here when you see the open itself is high and the low is close is near to low and the open is above the close, but the yesterday's high was not crossed. It indicated clear cut bearishness in the offing, and you can see that though the 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 volume is up, it is associated with a downside move, so it further confirms the bearishness. Like that, we should analyze each and every bar, even though we take the help of the indicators to make a decision. It is always advisable to look at the bars as it is. And another classical example is here you can see here the bar spike of the bar, how beautiful it is. Now you can see after a good went up, after a good up move, suddenly there was a spurt in the volume, which is more than the moving average, and also compared to previous days volumes. Still, it is happening at the highest stage after the second day. First thing here we have a red bar where open itself is high and close is near open, and the bar is a bearish bar where close is lesser than open, even though it has a new high higher than previous day high and low is higher than previous day low. Still, it is open was not below the close, and before this bar, the bar is an inside bar. Before this bar is a long bar, outside bar. So there is one outside bar followed by one inside bar, again followed by another bar, where the distance between open and close is less and open itself is high. That is a crucial point. With good increase in with a decrease in volume. On the next day, what happened? We place a good horizontal line here to determine the entry exit level. Here it is. Next day, what happened? Approximately at the same level of the close, the market opened and it went down. The low crossed the previous day low, and previous day high was not crossed, and there is a good increase, very good increase in volume, which indicates that there is a selling pressure and there is a bearish trend likely to happen in days to come. So even before considering other indicators for confirmation of trend, we can simply look at the chart and try to analyze what is happening with the previously mentioned criteria, like where is the open, where is the close, what is the distance between open and high, what is the distance between open and low, what is the distance between close and high, what is the distance between close and low, what is the difference between present day high and yesterday's high, and what is the difference between today's high compared to highest high of last two previous trading days and the low of the last 2 days low, lowest of the last 2 days low, and what happened to the volume, and suddenly is there any increase in volume, and there is a body or length of the increase in body or length of the bar, which indicates interest of the investors or interest of the larger institutional investors or domestic institutional investors who play a crucial role in the market to determine and dictate the trend of the market. For example, when you see a large bar like here you can see a large bar appeared here where the open is very much near to the close and the volume increased, and the length is very much good, larger, larger, and this one is closing here, so that it indicates that there is a trend reversal. And at the same time, when we insert a trend line, this trend line would appear like this. Here here we have a breakout. The breakout here confirmed by the increase in the volume, length of the bar, and close happening very much near to the high, happening very much near to the open of the bar, and low is very much near to the open, lower is very much near to the open of the bar. So this way, not only just a breakout, but the anatomy of the bar associated with the spike or amount of volume should be taken together to consider and confirm the breakouts. Thank you very much. More in the next video. Thank you.